all kind of too many steps. We in. Houston, we in. Are we in? Red dot here. I don't know. Yeah, live. Oh, too much happening. Hi, hello. I missed it. I am a little bit lazy here and there, and I kinda I don't know. This thing becomes a little bit irregular, a little bit lag. I don't like it, but I have to fix it. I know. So, markets, S&P 500. These lines, you can see, this is all like men's astrology, and this is this thing. If you're new in this thing for me and for you to understand both these technical analysis and lines, Fibonacci's, all kind of things cannot be valid indicator to analyze to the markets, global or local markets, anything, because you go I don't know, buy some real estate, you don't look at the charts of your territory, right? And but stock market is, or crypto, or anything liquid, global markets are this is like, people love this actually, because fundamental analysis is hard. I don't know extensively also about the fundamental analysis, which is the reading balance sheets and then all kind of things, yearly reports, quarterly reports, etc., investor relations, etc. So when I start streaming in April this year, 2025, we drove these lines as a joke, and I decided to drove again, extend it again and again. So this is a little line here to I need to extend. So I don't know, market is up, we see this is like our support, right? No, it can't be, because this is not a bear flag, this is not a degrees of parabolic, no, bull flag, no. Markets do what is going to do. So enormous line I drew right here, so we'll see what happens next. Possibly consolidation, meaning sidelines, going sidelines, little bit laggy, little bit chainsaw kind of thing. That's what I think. We'll see. We always we must not get hard on ourselves. What is the meaning? The meaning is you don't have to win the lottery, because in these days and decades and decades and decades to this day, and decades and more goes on, we see that the hyper financialization and hyper leveragization, blah blah, which means so much debt in everything. Debt crisis is expected highly, and investors are afraid. As you can see, a broad time frame, which is from April to this month, August. Remember, always, just 1 quarter before, you must remember, 1 year before, you must remember, because this is like timing issue, in time issue also, I think. So you don't have to win the lottery at all, and like, this line. If I put $100 in Bitcoin in 2010, I'd have $2.8 billion right now. No, of course not. You sell it for $400. You forex your initial capital, so you are terrific trade. It's enough, because live don't goes on with the $100 and $200. No, very big players in all countries, and financial institutions, funds, also governments. Recent event, this, you heard this, Intel, US government, I don't understand really, but US government seized the Intel's 10%. Is that seizing? Is that purchasing? What kind of dynamic are there? I don't know, but this is not a free market. This not seems free market, but besides that, yeah, let's get back into this topic. So if you put ... in that time, I'd have billions of dollars. No, line is not go linear, ups and downs dramatically, parabolic high moves, and panic crashes 80-90%, like these kind of assets. Bitcoin in 2010 was like lottery, gamble. So this tweet, I have to show this tweet to you, so that we should not get hard on ourselves to making a bad decisions, or look the history. If you're new at this, please listen. You look the history, and you look here right now and judge that guy. In history, this is not good. Life goes on, you move on, everything's gonna go right. Yeah, this tweets, I don't read this at all, but this net worth fluctuations. You can see, you can $100 to 170k to 110 million, kind of. No, these kind of fluctuations you cannot endure at all. 15 in 15 years. Yeah, this must be a good example. There's only 3 scenario. Yeah, if you are incredibly rich, you don't really care about the these millions of billions at all. Maybe billions, but if this your lottery money goes to millions, you cannot. Yeah, you don't want to sell this right away, I think. And second, you are incredibly lucky and found your key after losing it for 15 years. Yeah, one guy tried to, I know, in USA, if I'm not mistaken, that guy searched his hard drive, thousands of bitcoins in there, but after many years of searching of this hard drive in the trash, literally trash, city trash, he gave up. Third, you are incredibly retarded. Yeah. US debt has officially crossed above $37 trillion, and every how many months, 2 or 3 months, every 2 or 3 months, USA added its debt to $1 trillion on top of that, and they are signing acts and they put the debt ceiling, increasing the getting debt ability higher and higher. Not just USA. It's just one of a big market, yeah. But the other countries, China, European countries, small, big countries, I don't know, but all have to do this, whether or not they want to. In September, Federal Reserve, U.S. Central Bank, it's old news, yeah, two-week news. Rate cut soared over 94%. That means Fed is absolutely cut the interest rates. So risky assets goes higher and higher. Money supply, M2 money supply, yeah. August 13th chart, I don't know what here. US money supply, yeah, it's the same, not update. What is China? That's 45 degree as usual. Yeah, no matter no matter how hard you try, how easy you go on, but 45 degree linear chart backs on you, man. This is actually great image This is great image. I like it. Why I like it? Because this image kind of summarizes the economy and net worth of people, valuations of the companies, GDP of countries. It's just all form, nearly, maybe 90% of form. It's dangerous. It's dangerous, and we all have the glass of a beer glass on our hands. We have to, because we have to live. So yeah, we need to eat, drink, to live, and this is liquidity, actual liquid. And all central banks has to pour the beer on our glasses, and they have to do this carefully, because so much happened back in centuries ago to this day. And market cap is a form. If you don't have enough liquidity, if you don't have enough cash, market cap is irrelevant. These analyzes, these history looking chart is teachful, thoughtful, educational, yes, but not every time you can analyze linearly or certainly. That time this will be happen, cannot be entirely sure, because yeah, sometimes solid markets goes great depletion, and this is a huge risking area and enormous crash, enormous liquidity erosion in here, because this is not the era of the fiat currency situation. This is before Bretton Woods. Bretton Woods is US dollar is the reserve currency of the world, and this is highly speculative area in here, dot-com bubble here. But mortgage crisis, we cannot see these stock valuations hit new all-time high thing, but we saw it in 2020 and we crashed hard, but we don't know, we keep going up until something really unexpected happen, and we see kind of those situations, because central banks learns to liquidity is the most important thing in the economic health, economic stability. So I think many years there's increasing debt, increasing asset classes, increasing inflation. Unfortunately, some time passes, higher interest rates, asset prices go down, but not crashes. That should be really unexpected happen, because everybody can see these kind of data and analyze it. If you have a asymmetric information, meaning nobody knows what you know, and you positioned yourself in here, in there, in legally, and you are out of the chart. You are extremely lucky, in quote unquote. And yeah, I don't expect any hard crashes. So Federal Reserve Chair Jerome Powell term ending in May 2026. So what should we expect? We expect yeah, as you can see, before that, as you can see, there is a 4 time frame, and whenever interest rates cutting begins, recession goes after. Sometimes time frame is so wide, sometimes very narrow, because agility in the liquidity injection in the system, meaning money printing decision taken so damn fast and strong, there is no crash and V-shaped curve. Like, let me open the 2020 era, you know it. What a wonderful chart, right? 2020, you know it. Crashes, helicopter money, increase interest rate cuts, and global cuts, by the way, and 220 eras to 440s. This is a one country's index. Oof, something else. What should we expect? We should expect dramatic interest rate cuts. If unexpected things don't happen, liquidity injection in the all-time high, which is very unusual, but countries need them. Why do they need them? We can talk about this later, but they need the liquidity injections because simply unemployment, inflation can be a better option rather than a recession and unemployment, high unemployment. Things can be expensive, but if I don't have a job, I cannot buy even cheap things. Very simple. Yeah. Thank you very much. This is refreshing for me. I want to do this more, but yeah, we'll see. Yeah. Thank you.